Good morning everybody, it's Chris here from Serene Education with the 4 Majors Analysis Update for the 6th of July 2011. Going to be looking at Euro against US dollar first. It's on our CTC strategy. The daily chart. You can see we've come from a down and we're moving to the upside. However, at the one corner on the major, you can see that the intermediate trend, we've had an indecision candle, and then we had a very decisive candle yesterday, and we've seen a bottom out. This pretty much coming on a prior support area here, roughly around the 1440 mark, which is a prior support and resistance level in the past, and we've had a slight upside movement on the Asian market going into the European session. So could we have a possible bounce here? If you look at the projection from the start of this trend to the upside, notice that bounce has come on the 38.2% fib mark, and we're now testing the underside of the 23.6 fib area. So if we find support here at a prior resistance level, then we could have a bounce higher, and if that's the case, then we look at our projection figure. So that's our high. This is our bounce. If price continues to the upside, then we can look at these particular likely targets. The 23, 38, the 50, 61.4 will take us back up to the prior high. And then the 100 would be the previous high. We saw it here. So potential targets to the upside for this pair if price remains on this upside movement for the foreseeable future. Intraday, you'll see that on our hourly, CTC has gone red because we had that breakdown yesterday, late yesterday afternoon, after consolidating for a long period of time, just going sideways, pretty much not doing much. There was a high point and a low, and you just had to, I just boxed it, so waited for the break and traded lower last night, able to capitalize on that move. And you'll notice that the swings now, if you take this prior one, you're back. See, price is testing it now, and it's also testing the previous breakout area. Price support becomes possibly the new resistance. If this is to continue being very bullish, then he obviously needs to break the prior support, the very strong support area here, roughly around the 1446 50 mark, before we see further extensions higher. And then we can look at these, the previous high, roughly around here at 1456.50 as our ultimate target for this pair. The smaller time frames have gone blue. The CTC is blue. That's our 15 minute and 5. Just gone blue just recently. Looking at possibly testing the Asian high as we speak. Ideally, we want to be trading higher than that. The 30 minutes CTC has also got, so the smaller time frames, 5, 15 and 30 have all gone blue. But you'll notice that it's now testing the underside of this consolidation range that we saw for most of yesterday. So ideally you want to see it trading well above that. Otherwise, you could be trading consolidation, which is not what we really want. We want to be testing obviously nice clear moves. And you can see here on the 30 minute the swing highs as price will be making its way up during the Asian market. The latter part of the US session going into the Asian market, into the European session, you can see the highs to the upside being posted. So we've got a swing high, swing high, swing high. And you can see on the 30 minute price is testing the underside of this consolidation range. A break into this, we could see it consolidating further. Remember the institution moving average is above it. We are in a negative trend on the downside, the intraday chart. However, we are seeing a bounce. A 4-hour chart, you can see we have lower swings, and just recently we had a break of that lower swing. So very important. There we go. The price remains bullish, because we have this major support area here that price needs to get above before we see any further extensions higher. Notice on the 4-hour we have the red arrow and red candles, and however the CTC on this time frame is still bullish. It's still bullish, but to really confirm that we're still on a bullish trend, it needs to be trading above this consolidation range, because we've broken lower than a price support area, and hence the reason why the first part of the CTC has gone red is because we've done exactly that, broken lower, and we've formed a lower swing. So in order to cancel this lower swing and this negative move, we need to be trading above this range here in order to give us confirmation that we are looking likely to retest the 1455, the 145600 mark in the near future. The next one is sterling against US dollar. Is the daily chart. You can see where we've come from and where we're going to. You'll notice that just recently price actually broke the major trend to the upside, and by doing so closed lower. We had a pullback to the underside of that, a reattempt of trying to break high again. That failed, and we saw price revert to the downside. Since then we've had a pullback. That pullback has taken us to the underside of a prior strong support area, previous support level. So if I put that one in, you guys can see it. There we go, prior support, bounce there, further bounce, then the breakout, and you can see price is consolidated, a lot of wicks, a lot of indecision as we trade in the underside of that, and very indecisive. So this morning's candle is trading at the lower end of the wick, so looking very bearish. 1600, we are trading close to 1600 over, and 1600 ultimately is a strong prior support and resistance level. Notice we had a lot of touches on this black line. Resistance, support, 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 going over a number of months, going way back to early January, right through until the latter parts of March, and we haven't been back at this spot until just recently in late June. And indecision wise around this area here, it doesn't look all that favorable. The CTC is extended negative. We are in a negative trend. Intermediate trend is now broken. We've broken through a major trend. So overall, the trend price action on sterling, particularly against US dollar, is not looking favorable at the moment now. And you'll notice there's a lot of indecision. We've had a decision candle. Then we got closer to the support area, price support. Then we have indecisive long wicks, triggering a lot of stops. Very indecisive. It's been very, very difficult to trade intraday. You can, however, make your pips. However, you have to really, the setups have to be really spot on, and your money management would have actually been really stretched in terms of entry points and limits, etc. But very indecisive. No range at all the prior day. Then yesterday we saw sterling fall a bit, but reclaim some of those losses, and then still reverting, closing, and a spinning top. So we had 4 spinning tops and a doji in between that, and at the moment now we're seeing a dragonfly one at the moment. A lot of it's more trading in the bottom end of the wick after indecision, a very indecisive Asian trading session. So as it stands now, very indecisive at this area here, so we could potentially see the start of further downside movement in this pair, because you can see that the price is swinging lower, and we are testing this very strong momentum downswing as we speak. So intraday, look for nothing more than shorting opportunities. 1600 would be your first target. A break and close low in the 1600 would definitely confirm that we're looking at further downside movement, and then we could look at our setups to the downside to give us further confirmation. Next up is the US dollar against the Swiss franc. Notice the US dollar has been trading at an all-time low against the Swiss franc. That can be seen on the chart by this very negative CTC reading, trading well below. If I zoom right out, you can see the major trend has been very negative. We take it from the all-time high and zoom, you can see that the major trend is very, very negative. Recently, these highs have got lower, and the momentum is really sped up. And then along the way, we've had some chances to get into this particular trade and make some beautiful profits to the downside. We've had consolidation ranges. You can see I've just plotted 3 straight away. Major one is just recently over the period from early May right through to June. We've had a price support, a breakout, a consolidation, pullback, and then continuation. And then we had a bottom out in early June, strong support for almost a week, bounced to the upside, failed to materialize to trade higher than the prior support or resistance area here at 855 mark, and attempted the 80 mark, bounced high again, and now it's trading against this major trend line. And we saw almost, this is a classic indication of an uptrend, a small one nonetheless, but indecision, decision. And this over here is your classic evening star formation. So looking for further downside movement on this pair, and your next possible target would be this 80.34, 80.33 mark. We've been there before, so that'll be your ultimate target for this pair. Looking at intraday, you can see that downside movement on the pairs. The 4 hour has clearly failed to break above the 4 hour, and we traded lower over the past couple of days. Here again, on an hourly chart, you can see price movement yesterday. We had a breakout, and if you look at the fib projection from where price initially started this down move, we had this consolidation, and then we had the second run of this initial move, and 100% was reached. This morning at 6, we've had a slight bounce to the upside, and now we're consolidating in a range, and this range is pretty much the US high yesterday just before the close. So we're in this box. Ideally want to be trading higher than that. If you see any further downside movement or upside movement, apologies, notice the price swing that formed yesterday on this hourly chart. Price is testing this area as we speak. That is now what's occurring on the daily, where we had this equal drive up. We've had a bullish candle upside, slight pullback because of this trend line in play, and the 855 area just before that. Then we had a very indecisive next day, and then yesterday's equal drive down is a classic indication of up, indecision, at resistance, and further downside. This is a classic evening star formation, and hopefully you can see further extensions to the downside because of that that particular pattern. That's what happens with it does. I mean, that's what you clearly want to see in candlestick patterns. If you want to read candlestick patterns that don't really give you much indication, you can read into them. However, they don't. The majority of candlesticks are pretty much occur around support and resistance. If they occur around very strong support and resistance levels, then there's more likelihood of that particular move occurring after that candlestick pattern has formed. So that's what I'm looking at the moment now. It is at a major resistance, and this is a clear indication of a consolidation and a reversal pattern. So if you had bullishness, reversal looks very bearish because this candle here is literally engulfing the previous decisive up market's candle after an indecision day. The last pair of the day is the US dollar against Japanese yen. Let's have a look at the daily time frame. Here we've seen price consolidating to the upside. We know that 80 is a very strong support area because it's just been bouncing on this area for a number of months now. We are still trading below all the majority or the major institutional moving averages at the moment. Now we are consolidating. We're in a consolidation range to the downside. Notice the highs have been getting lower as we've been going, the longer we've been going into 2011. Bar this, where we saw price breaking to the upside, this was the intervention candle just after the, I think it was just prior to the news of the Japanese earthquake and the tsunami that followed after that. Closer to the right angle here, you can see that price has been moving its way tentatively to the upside, forming higher swings, which dictates an uptrend. And then yesterday's range was to the upside, however, kind of stagnant and failed to trade above the prior high, in this case, that we saw on the 29th and 28th of last month. Sorry, yeah, of last month, apologies. And this morning on Asian market trading, you can see that prices failed to break any higher than that and consolidated in this squeeze pattern. CTC is blue on two fronts, however it's still in a negative trend, hence the reason why it has not gone blue across the board for this. So we're still in a consolidation range for this pair, and we won't get any further upside movement until we actually see price trading on well above the 8100 mark to start with, and then we could look at the major trend to the downside as our next possible target. Ideally, we could be looking at the price swing here in this case at 81.50, 55, and then that one at the top there would be our ultimate target at the 8200 mark. Failure to see price trading above 81.10 would look like price is consolidating yet again, and if we get a bearish engulfing here, then we could be looking at potentially possible targets intraday to the price swing to the upside. This one will be here roughly at the 80.55 mark, and ultimately way down here back at 280 mark. So intraday, look for further downside movement. If we do get a bounce here, it would need to bounce off the 50 period and stay above this area here going into the latter parts of this week. It's got to stay above these areas here, roughly at about the 80 mark. Failure to do so would see price reverting to the downside. Remember that we have non-farm payroll on Friday. Tomorrow we also got the unemployment figures that come out prior to the unemployment figures, so they might very well actually give us an indication of what price is likely to do on Friday, and that'll dictate what's likely to occur for the next week, the following week. Intraday, you look at the setup. On the 4 hour, you can see the higher swings depicting an uptrend. A very skittish one, but you can see that the higher swings, and you can see the price now trading above the institutional moving average here at roughly the 80.65. Needs to be, as I mentioned, needs to stay above that area here. If we could say see price trading above 80.70 going into the latter part of this week, and the unemployment figures in the US are good and non-farm payroll is good, then we're going to see the US dollar bounce higher against the Japanese yen. Failure to do so, then we're going to see price reverting back to the downside, and because we are trading at a consolidation range overall for this pair, we could see price just consolidating and then reattempting the lows at the 80 again for the foreseeable future. That's it for today, guys. I hope you have a fantastic trading day. Please ensure that if you're using the CTC strategy, that you follow the rules of the CTC strategy and you back that up with solid money management. And if you are in trades, make sure that you are keeping tabs on them. And most importantly, just enjoy your trading. And just be aware that going into today, if there's any news, it's quite a quiet day out there, to be honest with you. On the news front, we don't have a lot coming out today, but just be aware of it. But we are going into this Friday is non-farm payroll in the US, and these can obviously have will give us more indication of what's likely to occur, especially against the US dollar cross pair for this particular week. All that remains to say is trade serenely.